Hey everyone, it is Jay Soloff from Investors Alley. This is our options trade of the week. This isn't a trade recommendation for one of my services, but something we are looking at for educational purposes only. We are at marketchameleon.com, where I am looking at the unusual options volume page that I have sorted by volume to see what the action is in some of the bigger names, such as Nvidia, which just had a 4-for-1 split, so not surprising to see a fair amount of action there. We are going to look closer here at Carnival, cruise line, which has been pretty active in the options circuit since the pandemic. Obviously, cruise lines were probably hit harder than any other industry. You can see today Carnival's traded 3 times the regular amount, almost over 450,000. 72% calls. That tends to be a bullish signal when the action is on the call side. You can see here that the stock was up 10%. So sometimes the calls are plentiful because the stock is up quite a bit and people are just trading that momentum. Sometimes the calls are higher on a big down day or a flat day if there's a lot of expectation that it's going to go up. So in this case, it looks like it's up 10%. People are trying to ride that higher. So, but we'll take a closer look here. With Carnival, the news, they do expect something like 65% of their capacity back by the end of 2021. And they also just refinanced a whole bunch of their high price debt with something lower. So good news pretty much across the board for Carnival. If we look at the trades here, once again, I sort by quantity. There is, when you see these calls and puts trading at the same strike, that's generally like a synthetic future. Basically, it's like taking a position in the stock almost, but using options to do it. A little bit more complicated, probably something done by like a fund or institutional client. One thing here, let's see. Some of these, this one here, June 17th, 2022. So it's about 11 months from now. So next year's June, 22.5 calls traded with stock at 22.88. So almost the at the money calls, stock contingent. So this is likely a covered call, a long-term covered call. And when you see it purchased here, basically this $4.50 sold for $4.50. When you see it at the money like this, this is basically a yield trade, a return on cash at risk trade. So by doing it at the money, there's not a lot of upside. In fact, 38 cents of that, if you take out 38 cents for what it's in the money, the rest of this is all pretty much premium to be collected. You could see most of this 1.1 is just premium that is return on cash. So just some quick math. If you take out the 38 cents for the fact that stock was done slightly in the money, then this is something like an 8% return over the course of a year, something along those lines. So not bad if you think about how low rates are, that you're not giving yourself basically any upside potential in the stock, but you are collecting 8%, something like that, in return on cash at risk. Also, this 450 means that you get down, you don't start losing money on this trade till 18, and the fact that actually cruise lines are opening up, not going the other way, means there's probably not a ton of downside risk. So this is a long-term trade, but if you think about it as almost like investing in a high-yield bond that pays 8% in a year, that's what this trade would be like. And also, you can see here, this is the chart. You can see it's the last couple days with the good news. It is uptick quite a bit. So again, probably not a whole ton of risk over the next year that Carnival's going to drop and stay. It might go down on spikes and variants of COVID, but for the most part, you would expect it to rebound as they're planning to reopen over the next several months. So feels like a relatively safe trade over a year, over the long term here. Looking that you could see here 22.5. So most of this 2,500 volume was purchasing or selling these calls again at about 450 you do it against stock, and it looks something like this, where as long as it stays here, this is the full premium you collected, roughly 8% return. As you go down, as it gets, the price has changed a little bit. The stock price has changed since that trade happened, but you could see here it goes down to about 19 or so before it starts losing money. So this is a again, almost purely a yield trade in terms of return on cash at risk. Now, if you're interested in more straight call and put buying, you can check out the link on this page to the Option Floor Trader Pro, which is my service which focuses on some of the easier concepts of just buying and calls and puts on more directional type trading. All right, I will be back next week with another trade of the week.